We are discussing solvency ratios for chapter 4. We had already discussed debt equity ratio. Today we will be discussing proprietary ratio and total asset to debt ratio. First, let's discuss proprietary ratio. This ratio expresses the relation between the proprietor, that is shareholders fund, and the assets, okay, net assets, okay. So the formula is proprietary ratio is equal to shareholders fund divided by total assets. Capital employed can also be used instead of total assets, but it is preferable that we use total assets, okay. Now the significance of this ratio is that if the shareholders fund is higher as compared to total assets, or in the ratio the higher proportion of shareholders means that capital has been used more to finance the assets, and which is considered as a positive feature. If the shareholders contribution is less, proportion is less, then it instills a type of fear in the investors, okay. They hesitate to invest in the companies where the proprietary ratio is low. Then total assets to debt ratio, that means it mentions the relation of the total assets and debt, okay. Coverage of long term debts by assets. The formula is total assets upon long term debts. Higher ratio indicates that most of the assets are financed by owners fund, okay. That means in this case higher ratio is considered better. Let's take one question to understand this. This is the balance sheet given. Shareholders fund is 4 lakh plus 1 lakh, that is total 5 lakh is there. Non-current liabilities, that is long-term borrowing, is 1,50,000 rupees, okay. And total assets is 7 lakh rupees. We have to calculate debt equity ratio, total asset to debt ratio, and proprietary ratio. Debt equity, as per the question, debt is 1,50,000 and equity is 5 lakh rupees. Long-term borrowing 1,50,000, equity share capital plus reserves 5 lakh rupees. So the ratio is 0.3:1. In the same question, total assets was 7 lakh rupees, okay. Fixed assets plus non-current investments plus current assets 7 lakh rupees, and long-term debts, that is long-term borrowing, is 1,50,000. So total asset to debt ratio, total assets divided by long-term debts, is 7 lakh divided by 1,50,000, and the ratio is 4.67:1. 4.67:1, higher ratio, okay. Then proprietary ratio, formula is shareholders fund upon total assets. We had calculated shareholders fund 5 lakh rupees and total assets 7 lakh rupees. So the proprietary ratio in this case is 0.71:1.